The world's financial markets are flashing red. Inflation refuses to cool, global debt is climbing past $315 trillion, and wars in the Middle East and Eastern Europe are reshaping world trade. But in the middle of this chaos, one thing is shining brighter than ever. That is, the gold. Just a year ago, gold was trading near $2,000 per ounce. Today, it's hovering above $4,000, smashing every record in history. For centuries, gold has been the last safe place when everything else collapses. But the speed and scale of this surge have left even experts stunned. So what's really going on? Why is gold rising so fast right now? What's fueling this rally? And how does it connect to global politics, inflation, and the decline of the US dollar? This video will discuss everything. So let's start. To understand why gold prices are rising, you have to first understand what gold represents. Gold is not just a metal, it's trust. Whenever people stop trusting banks, currencies, or governments, they turn to gold. And right now, that loss of trust is happening worldwide. According to the World Gold Council, total global demand in 2024 reached nearly 5,000 tons, the highest in a decade. Investment demand alone surged 25%, hitting more than 1,180 tons. By mid-2025, it jumped even higher, with quarterly growth of over 170% compared to the previous year. Who's buying all this gold? Not just investors. Central banks are leading the charge. They bought more than 1,000 tons last year, one of the largest annual purchases in modern history. China added over 225 tons to its reserves in just 12 months. India, Russia, and Turkey have all followed the same path. Why? Because they're preparing for a world where the US dollar no longer holds unquestioned power. This is what economists now call de-dollarization. Nations are reducing their dependence on the dollar in trade and using local currencies or commodities like gold to back transactions. The BRICS alliance, with China, India, Russia, Brazil, and South Africa, is leading this shift, and every time they buy gold, they're effectively reducing the dollar's dominance. But the story doesn't end there. Supply is limited. In 2024, total global gold supply increased by just 1%, reaching 4,794 tons. Mining output can't keep up with demand. Many mines are old, new projects face environmental and political hurdles, and costs of fuel and labor have gone up sharply. So we have record-breaking demand, stagnant supply, and that's the perfect recipe for skyrocketing prices. Now, let's look at the economic backdrop. Global inflation remains a threat. In the US, it's around 3.4%, still above the Federal Reserve's comfort zone. In Europe, energy costs are rising again. Japan, after decades of deflation, is finally seeing prices climb. And on top of that, global debt is at an all-time high. $315 trillion, that's 4 times the total world GDP. When investors see governments borrowing endlessly with no clear plan to repay, they look for protection. Gold becomes the shield against a system drowning in its own promises. Even if interest rates look high, real yields, meaning returns after adjusting for inflation, remain low. That makes holding gold more appealing than parking cash in a savings account, losing value every month. Then there's the psychology. Gold is not only about profit, it's about fear and faith. Every time there's a geopolitical shock, people run toward it. The war in Ukraine, the ongoing conflict in Gaza, and growing tensions in Asia have all pushed investors to seek safety. And for billions of people, especially in Asia, gold isn't an investment. It's tradition. It's the one thing that holds value no matter what the government does. In India and China, gold bar and coin demand has jumped by over 10% in just 1 year. Technology is also making it easier. With new digital gold platforms, blockchain-based gold tokens, and mobile trading apps, ordinary people can now buy gold instantly, sometimes even in fractions. What used to be the wealth of kings has now become the hedge of the common man. But the real turning point is what's happening behind closed doors, in the vaults of central banks. Many countries are quietly shifting their reserves away from the dollar and into gold. Some are even using it to settle international trade deals. For the first time, gold has overtaken the euro as the second largest reserve asset in the world. That's historic, and it signals a deep transformation in global power. Gold is becoming the neutral currency of a divided world. So where does all this lead? Analysts now predict gold could average $3,350 per ounce this year and climb toward $4,000 or even $5,000 if global tensions escalate. However, if inflation eases, if peace returns to the Middle East, and if central banks stop buying at this pace, the price could stabilize around $2,200, $2,400. But make no mistake, this is not a bubble in the usual sense. It's a signal, a reflection of how fragile global confidence has become. When people stop trusting paper money, they don't turn to crypto. They turn to gold, because gold is the only currency that has survived every empire, every war, and every financial crisis in history. So the next time you see headlines about gold hitting a new high, remember, it's not just a price story. It's a story about fear, power, and shifting global control. But what do you think? Will gold continue to rise and cross $5,000, or will global stability return and bring prices back down? And what will it mean for the dollar if the world's faith finally shifts toward gold? Tell me your thoughts in the comments. I'll be reading them all.